I'm here with James Timpson, Deputy Fund Manager of the Courtiers Multi-Asset Funds, to understand what's been happening in markets throughout February. James, hi, what can you tell us?
Hi Leo. So markets got off to a blistering start in January and they've been a bit more subdued in February. So the global equity market as a whole, as measured by the MSCI World Index, that was off just over 1.5% for the month. Still up quite considerably year to date, but markets have just been wobbling a bit due to continued uncertainty surrounding the Russia-Ukraine conflict and rising interest rates. However, continuing a theme from last year, the market that's been really outperforming everything else recently has been the UK large cap market, or the FTSE 100 index. And that's because that index is really dominated by oil companies, so the likes of BP and Shell, which between them make up around 13% of the entire index. They've been continuing to post strong results due to the high energy prices we have at the moment. Also, it has quite a strong concentration in financial companies, such as banks, and they tend to do quite well in periods of rising interest rates, which is what we've got at the moment. And as we mentioned last month, as predicted, the Bank of England did increase interest rates to 4% last month. But inflation is coming down, so last month it went down from 10.5% to 10.1%. But as I say, the FTSE 100 index continues to be the strong performer of all the market indices at the moment. So it's been a good time for UK equities.
James, we were talking earlier and you mentioned with the FTSE 100 that it reached 8,000 for the first time. A, what does this mean? And B, what does this mean for Courtiers Investors specifically?
Yes, so because of the strength of UK large cap stocks, the FTSE 100 index has finally surpassed 8,000 for the first time, having gotten close a number of times, particularly just before the tech bubble, way back in late 90s, early 2000s. So it's finally reached that barrier. We have exposure to the FTSE 100. In fact, our multi-asset funds are overweight the UK at the moment because we believe the UK market is shows considerably more value than many other markets, such as the US. So we've been underweight the US for a couple of years now and overweight the UK. So the funds have really benefited from the recent strength in the UK market. And even with the FTSE 100 at these levels, the UK is still exhibiting a lot of value compared to other markets. So we remain quite positive in the UK.
How about other stocks in the portfolios? How have these been faring through these wobbles we've seen in February?
So a lot of companies have done well in this environment. So we have exposure to commodities firms such as BHP Group and Rio Tinto. They've been doing well in these periods where we've got increased commodities prices. Similarly, we have exposure to financial companies such as Barclays and Lloyds. So they've been doing well in these times of higher interest rates. Obviously, you're going to get some wobbles. So in the last few months, we've seen tech firms struggling, having done so well during the early part of the pandemic. But thankfully, we have reduced exposure to those expensive tech companies, particularly those big American ones in the US, the likes of Google, Microsoft and Apple. We reduced our exposure to those a couple of years ago in favour of a more value-orientated US exposure. So Courtiers funds in general have held up really well over the last couple of years.
And just to be clear, we've never been directly invested in those big tech stocks, have we?
No, so we've never held the likes of Apple and Amazon, etc. directly. We've had minimal exposure to them via the broad S&P 500 index.
Thanks, James. And finally, I'm not going to ask about any specific stocks, but how does the land of opportunities look right now?
Yes, so we are still seeing plenty of value opportunities at the moment. Just this week, we've been looking at a Brazilian healthcare firm for our emerging market portfolio, which is in each of the multi-asset funds. And that's recently popped up on our value screens being a potentially lucrative stock based on its low price to earnings ratio. So we're looking at that at the moment. Other opportunities arising as well. We've recently added Wincanton to the UK Equity Income Fund. Wincanton is a haulage firm which has recently cropped up on our value screen, so that's just entered into the fund. And it's an ongoing process, so we're always looking for new stocks to invest in.
And finally, China. Anything going off there?
Yeah, so China's been really volatile over the last few months. In fact, having done really well towards the end of last year and in January, this month it's back down another 10%. So there's all sorts of wobbles going on in China at the moment due to uncertainty surrounding what the government's going to do. We don't have any direct investment in China. The closest we have is an emerging market position in Lenovo, but Lenovo is a global brand, so its actual direct exposure to China is quite minimal. Apart from that, we have no direct exposure at all.
James, thank you very much for this month's update. I will look forward to catching up with you again in around 4 weeks' time.